So here is a stock chart of Abbott Laboratories, ticker symbol ABT, and it's a super safe, super stable stock in the healthcare space. And we can see over the last 3 years, we have been steadily and consistently increasing in share price month after month, with the only exception being in March 2020 when the entire market crashed. Abbott also pays a decent dividend of around 1.5% with a low payout ratio and an aggressive 10% year over year dividend growth rate. And all in all, Abbott is an incredible business. It's a blue chip company. It's super safe, super reliable, super consistent, but there was something that happened today that rocked the entire healthcare space. Here you can see from this map that right dead center is the healthcare sector, and it's in deep, deep red today. And who was the biggest loser? Abbott Laboratories, guys. It was down 9.29%, a massive drop for such a stable company. And it was actually one of the biggest top losers today. Now, Abbott isn't some small, couple $1 billion business. This is a $200 billion company that dropped nearly 10% in a single day. And you saw its charts. It hasn't had this kind of day in the last 3 years apart from the overall market crash. So what gives? What's going on? Well, the thing is, before we get into the details of that, we need to understand that Abbott has a huge weight in this sector. When Abbott pulls down, it pulls down the entire sector. When Abbott has a strong green day, it's going to do the opposite. It's going to pull up the entire sector. And because of this, it kind of has, even bigger effects. If Abbott is here dropping 10%, it's pulling down the entire healthcare sector, and the entire healthcare sector is going to be pulling down the S&P. And guess what? The end result is the S&P having a lot of selling pressure as well. Now here we can see XLV. This is the most popular healthcare ETF, and it saw a 1.64% decline today. And in my opinion, this is mainly because of Abbott, because it makes up over 4.5% of this ETF, and it had some good sway in pulling it lower today. But like I said, it wasn't just Abbott here that was red today. Most of these healthcare stocks were. So let's understand, why this is the case, what happened here with Abbott Laboratories. And I'll actually throw up some stocks here that, saw a decline today, but honestly, probably just buying opportunities. So this morning, Abbott released a statement saying that it is lowering its guidance for 2021 due to reduced demand for tests that it manufactures. The revision was quite significant. It was a 16% drop from the low end of the estimate, and this is with their EPS estimate. But it's important to note that in 2020, Abbott reported $3.65 in EPS. So even after this revision, we're still going to see around an 18% increase year over year. So it's kind of good and bad. The market never wants to see a stock revise and lower guidance. It gets punished like we saw today. But the question we got to ask ourselves is, does it deserve a 10% correction because it lowered guidance here? That's kind of where the independent thinking and us for individual investors, we got to really look and see, is this a buying opportunity? Well, here's the thing. If you read a statement from the company, they say that yes, they are going to see some less revenue and profits this year from lower testing demand. However, their organic base business growth is accelerating, and the headlines seem to miss this. The testing products that Abbott creates is temporary. This is not something that the business is known for. This is not something the business is relying on. It's just something that happened over the last year. They were there, they produced something, they took advantage of it, and they got a lot of money from that. Now they're going back to how they were before, safe, stable, consistent, and the market seems to be punishing them for that. In fact, here you can see some of their consumer products, and you're probably familiar with some of these brands. And if you've had a baby recently, you probably have fed them some Similac formula, which Abbott creates. So they're pretty big, and they may not be a huge brand for consumers, but they produce a lot of stuff. And based on the statement we just read from the company themselves, the core of the business is still doing just fine, and growth is accelerating, not decelerating. So again, strong sign for the future of this company. That to me says that this is possibly a buying opportunity. It's possibly a temporary drop here in the stock price, and it's just the market overreacting to some negative news. Here we can see what analysts think on tip ranks. A couple of them actually reiterated their stance today. Goldman believes that it's a sell, but the ironic part is that their price target is $120 per share, which is around a 13% upside from today. And then we had another firm, BTIG, come out and reiterate their $140 price target despite today's news. So it looks like Wall Street is still fine. We're probably going to get some more analyst revisions over this next few days with the new, updated guidance. They're going to go look at their models and see what the stock should be worth. But I think for the most part, at close to like 105 per share right now, this stock is definitely trending closer towards undervalued. Now, let's talk about some other healthcare stocks. Why did this affect other companies? It should just be a specific issue here. It was just Abbott that lowered their guidance, so they should get punished. Why are all these other healthcare stocks down as well? Well, here's the thing. When a leader in the space, one of the largest companies in the space, revises and lowers guidance, it sends a lot of fear, uncertainty, and doubt out there in the market. And investors start questioning, are these other healthcare players going to lower the guidance as well? This company is also reliant a little bit on testing. This company also has something to do with testing. Maybe they're going to lower their guidance too, and the outlook's not as strong. All of this FUD starts coming up, investors start getting spooked, and selling leads to more selling, which is what we saw today. In my opinion, I think this is kind of overblown. Yes, it was a revision down. They probably thought long and hard about whether they wanted to do this, and they figured it's probably the best thing to do because it makes sense. Testing is going to reduce, vaccines are going to keep going up, and that's just how we're going to reopen the economy worldwide. So it is what it is. Again, I want to reiterate though, this isn't a core part of Abbott's business. It's just something they benefited from recently, and now those euphoric effects are starting to wear out, which I think is perfectly normal. But anyways, because of all of this FUD being spread, these stocks also got hit pretty hard. Johnson & Johnson dropped around 2.2% today, which is a huge move down for this $450 billion giant. Pfizer, another player in the space, providing vaccines and such, saw around a 0.5% drop today. So not too big in the grand scheme of things, but still a pullback. United Health, this is a healthcare giant, down 1.26% today. Thermo Fisher Scientific, another $200 billion company, down nearly 5% today. And even some newer age companies like Viva here, for example, dropped 2%, but it was down much lower in the morning. So this was a pretty broad-based sell-off, guys, in the healthcare sector. So to me, guys, my conclusion is that the market is overreacting to this. Yes, the stock definitely does need a little bit of a pullback because they lowered guidance. 10% though seems a little steep, but we'll wait and see how things shake out. For long-term investors, it's just a buying opportunity. If you're looking to buy some healthcare stocks, which, in my opinion, were actually overlooked and undervalued over the last year or so, this is probably a great opportunity to add some in, lower your cost basis if you held some of these stocks, or maybe open up and build new positions. Like, for example, I'm looking at Johnson & Johnson. I may add that to my dividend portfolio. We'll see. But guys, I'm curious to hear, if you actually picked up any healthcare stocks today. Just go through the list of your favorite healthcare stocks and you'll probably see most of them were down today, and they may continue down for the rest of this week as Abbott kind of finds its base. But if we see some more aggressive selling in these companies, it'll be an even bigger buying opportunity. That's just my opinion. Anyways, guys, hope you enjoyed this video. Hope this was of value to you. Hope this answered the question as to, why these stocks were down today. And if you found any value at all, hit the like button and subscribe to the channel as well. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.